we have looked at cash flow. Some of us complained about a template, and I did mention to us that the standard in itself is not strongly about templates, although for examination purposes, it might be important for us to have like a pro forma template which will guide us so that we don't miss out on certain key elements. But over time you will just discover that a pro forma or template is not necessarily required as you go on, especially if you have not mastered especially if you have mastered cash flow over time. I said I was going to show you something which I still hope I'm able to remember so that I can show you how you will ensure that you don't miss out on doing the correct thing in case your cash flow fails to balance. What are the things you should look out for, and how you can easily correct yourself so that the cash flow will be in tandem with the cash balance of the subsequent days, which there are three aspects of the cash flow. We mentioned that we have the operating activities, investing activities, and then lastly we have financing activities. And if you recall, I said operating activities, you're looking at the primary activity. The note says, it says are the principal revenue producing activities of the entity. And I remember we made an example of Equity Professional Limited, where we said it is those activities that are related to the primary focus, which is where we intended to generate revenue from. And that is majorly the tuition fee. If we sell you materials that we produced, that becomes part of um, primary activities. So that should be an operating activity. But we said something like if we had to dispose our generator, maybe because we purchased a new one, the purchase of a new one and the disposal of the former one are both investing activities, because that is a non-current asset. I said the best way to look at it is to go and look at the non-current asset. And when you're dealing with operating activities, so you have two approaches for operating activities. You have direct and you have indirect method. Now, let me rush you down to what this note quickly said about direct versus indirect method. It says here, if you're able to see my highlight, it says the direct method is encouraged where the necessary information is not too costly to obtain, but IS7 does not require it. In practice, the indirect method is more commonly used since it is quicker and easier. Now, it's quicker and easier because in indirect method, I can easily do a walk back. Now, for me to have the information that is necessary for me to do direct method, I will need to find a way to get three things. For direct method, the what is it called now? The the template is not so much, but then where you will sweat it out is when you will say, how do I get, sorry, I just want to show you the template as I am speaking. All right, good. You see, there are only three lines here: cash received from customers, cash paid to suppliers and employees, and then we get the cash generated from operations. Then you deduct any interest payments that has been made, and any income tax is paid. And that's that about that. Very straightforward. But the problem is this: how do I get cash receipts from customers? How do I get cash paid to suppliers and employees? What have you? So, if the examinable question will be, so it's not common that they ask you to do direct method. What is more common is the indirect method. Very, in fact, for ACCA, they won't set direct. They will focus on indirect method. All right. Okay, I got a call from Mr. Wasu. Let me just find out. Let me just let him know I am in class. All right. Okay. So back to the activities. Please give me a second. Give me a second. All right. Let's get back into it. Sorry. Now, you see, for financing activity, I have also told you where to look at. You are simply looking at the equities and the liability side. Remember, we said that the way IS1 has structured your financial position, it is such in a way that you have total assets and then you have total equities and liabilities. And I said the sense behind that is that they are simply trying to let you know that your total assets is either financed by the capital contributions and retained profits of the owners of the business, and whatever capital contribution you find from other parties, which you are going to regard as liabilities. Now recall that under your current liability, we would have dealt with current liability under movement in working capital. So current liability does not form part of the financing. It's usually the non-current liabilities. Now, under the non-current liabilities, you may have items such as your taxation, the income tax provision. Now, that also has to be dealt with separately. It's one of the requirements of IAS 7 that we should show the tax that has been paid. And you would imagine that the reason for that, let's go there. I just want us to go through this note. I know that some of us downloaded the note and you probably did not read any part of it. Now, required disclosures. Number 2, it says cash flows arising from taxes on income should be separately disclosed and should be classified as cash flows from operating activities unless they can be specifically identified with financing and investing activities. So it's under liability, and I know I have told you that when you are looking at financing activities, you should look at liabilities. So when you now see taxation under liabilities, taxation is not used to finance the business. Instead, what you're going to do is that you are going to treat it under operating activities. You treat it under operating activities. All right. And that is why, even if you have current taxes, you don't do the movements, you do it by looking at the income tax, add it back. Um, if you are starting with profit after tax, you add it back and then you deduct the income tax paid. Or you start with profit before tax, and then instead of adding back income tax, you just take the tax paid and deduct directly, which is what the pro forma I gave you is enunciating. All right. Now we have done illustration 1 for Kane Co income statement. We've done illustration 1. Now we move to illustration 2. We move to illustration 2. Now, both questions has asked us to do the indirect method. If the question is quiet as regards anything, please go ahead and use your indirect method. That is what I will teach you the most. I'll take up a question that is a direct question, but it will be only one. And the focus of that question is just for me to do the direct method and show you. That's all. That's all the business I will have there. But for indirect method, I'll solve this question, give you assignment, send you solution for that assignment using indirect, because I want you to know it and be used to it. That is most likely, I'm 99.9% sure, if you are going to get cash flow statement as part of your examination question, you're most likely going to be asked to do the indirect method. All right. So let's move on to question number 2, IMACO. Now for IMACO, we have the statement, or it was straight to the point, statement of financial position and the income statement for the year ended 31st December 2022. All right, they gave me that, and then they gave me additional information. But in my typical style, I would like to first of all go to the requirements. The requirement says I should prepare a statement of cash flow for the year to 31st December 2012. All right. So let's go back. It's using the format laid out in IAS 7. Okay, the format that I've given you. All right. Said the proceed of sale of non-current asset investments amounted to 30,000 naira. Then fixture fittings with original cost of 85,000 naira and the net book value of 45,000 were sold for 32,000 naira during the year. Number 3, the following information relates to PPE. And then we're giving numbers for 31st 12 20x1 and 31st 12 20x2. We're giving the cost, accumulated depreciation, and net book value. Now, if you look at the net book value here, I'm sure it ties to the PPE in the SOFP. Is what I'm referring to here. So PPE here, you see 380, 305. And then when you come down, that breakdown also shows net book value of 380 and 305. So they are giving us the cost and accumulated depreciation element. All right. Now we're told 50,000 1 naira ordinary shares were issued during the year at a premium of 20 kobo per share. All right. The short-term investments are highly liquid and are close to maturity. Okay. Number 6 says dividends of 80,000 naira were paid during the year. Prepare a statement of cash flow. Okay, we read that already. So what we would do is this: we'll use a style similar to what we did in the last class. All right. We're just going to pick it up from where we stopped. We'll do um we'll do it on a spreadsheet. We'll do it on a spreadsheet. If anybody wishes to take the screenshot, you may go ahead. Let me just go to the beginning of the question. Or are we fine? We don't need screenshots. It's the same date. So I can copy down here. Just change this to IMACO. All right. Now, if you look at the note I gave you, the template I gave you, I want to go by the books now and do the same thing that is inside that pro forma, taking it line by line. The standard in itself did not provide us any template. All right. But I'll just go line by line. Says we should start with profit before tax. So question will be, were we given a profit before tax? I would think so. So what was the profit before tax that we're given? In line with the question, the profit before tax was 300,000 naira. All right. Let's go to the income statement. Profit before tax is there, 300,000. All right. And now we'll begin to make those adjustments we normally would do. And we usually start with depreciation. Now, get used to it. Your depreciation charge will require you to do workings, okay? Now, you should even have that mind. Once you see them breaking down your PPE into its cost and accumulated depreciation element. All right, pay attention to what I want to do in case you missed it in the last class. Now, my depreciation charge. Go to the additional information. Additional information number 3. Right there and there, you are going to see the breakdown. Now, accumulated depreciation, we're giving accum dip, that was brought forward. Or you can put in brackets if you like 20x1. They told us that this was an amount 290,000 naira. All right. But the same question, if you check out the additional information number 2, additional information number 1 was talking about non-current asset investment. They said we had a proceed there, but that's not where we are going. Where we are going, we are dealing with PPE. If you look at additional information number 2, fixtures and fittings, they said it had an original cost of $85,000 and then a net book value of 45,000 naira. Sorry. I think I'm dreaming of going to America. Maybe that's why I'm saying dollars. 85,000 naira as cost, 45,000 naira as net book value. All right. And the same fixture and fittings was sold for 32,000 during the year. Now, what I need here, the information I need here is the accumulated depreciation of the disposed PPE. Now, we disposed PPE during the year. So what is the accumulated? Because what you would have done is to, like I explained in the last class, when you dispose an item of PPE, you will deduct it away from the cost. You will deduct it also away from your accum depreciation. So since I want to deal with depreciation now, I need the amount that must have been deducted. All right. So how do I get the amount that must have been deducted? They told me the cost of disposal of assets disposed. They told me it was how much? They told me it was 85,000. Then they now told me that the net book value or carrying amount of the asset is 45,000. All right. So it's very easy to know that my accumulated depreciation, how I will get my carrying amount is by saying cost minus accumulated depreciation, isn't it? That's what I would have said. So if you already gave me the carrying amount, then it means that I need to do this minus this. All right. It means my accumulated depreciation must have been 40,000 naira. All right. So the accumulated depreciation of disposed PP, the accumulated depreciation of the disposed PPE is this 40,000. All right. Okay. Now, if the accumulated depreciation is 40,000, don't forget that it must have been a deduction. We are trying to deduct it away from the current accumulated depreciation we have. If at the end of the year, I now have how much now? I now have, let's go back to that breakdown. At the end of the year, the accumulated depreciation under note 3, we are told is 340. This time it will be 20x2. It therefore means that the depreciation for the year, would have been the difference between this and this. So this is my depreciation charge. All right. So I'll come here. Depreciation charge will be added. I've always told you this. Now, the reason you are adding it back is because you may add here. I think I did it with the last solution. You may say here adjustment for non-cash items. All right. Okay. Now, if you go by the format I gave you as well, they made mention of finance costs. Now, I see this finance cost. This finance cost, this is how I'm going to treat it. They are referring to interest expense. You can put it there. I said it in the last class. There is a difference between interest expense and interest paid. Interest expense means you are accruing that we will have to make a payment at the end of the year. So you are accruing for it. It may not be the same amount that was actually paid. So now, why we are adding this back, why we are subtracting this is because if you look at the format, interest paid is to be deducted here. But mind you, in the last class, I told you that that interest paid should be an investing activity. All right. So the standard does not say by force by fire. You have to put it in operating activities or you have to put it in investing activities. But this is how I see it. If I am making, I said, interest received is what I said will go to investment activity. Your interest paid, I said I am seeing it as a financing activity If it is
Yes.
associated with a loan, for instance, I am making interest payment on loan. If loan is a financing activity, then I expect that the interest I pay on it should also be a what? A financing activity. So if you like, you may not do your interest paid here under operating activity. You can take it to financing activity. You join my school of thought. But if you take it away from here, you will not be penalized for it. Meaning that your interest paid, you treat it here instead of treating it in financing activity. It might be that you chose that, okay, it's not obvious enough for you. You don't see reason to take it to financing. But I see reason. Maybe because in practice, that is what I would normally do. All right. Now, coming back to interest expense, let's look at it. The interest expense were already given in the question. The interest expense must have been deducted. If you look at it, you have it on two lines. First of all, there is other income, interest received 25, and then you have finance cost of 75 as well. All right. This is something I need to correct. It's not supposed to be a deduction. It should also be an addition. It should also be an addition. It is the interest paid I am going to deduct. All right, let's move on so that because of time, if you go back to the formats again, you are going to see investment income. Okay, I see. I have done one by fortune. So it is the investment income that we are supposed to deduct. So you have it there in the income statement. Just look at your income statement. Other income, interest received. Interest received was how much there? 25. So it must have been added initially to our profit. But because I don't see interest income, I don't see it as an operating activity. This investment income or interest income, I believe is coming from investment we did. Maybe we invested in equity of another company, or we invested in bonds, or we invested in treasury bills. Those are not our primary activities, all right? So therefore, I'm going to regard it as an investing activity and not as a primary activity or operating activities, all right? So what's the next line I have there? We have dealt with depreciation already. Is there amortization? In the question, we have intangible assets. All right. Now, when you have intangible assets, you may have amortization. But the question did not tell us anything about amortization. Okay. So I am going to assume that the intangible assets that we have is not being amortized. Okay. So there's no amortization in this question. All right. Let's move on. Profit or loss on disposal of PPE. Now, PPE is not the only non-current asset that was disposed. If you look at the question very well, information number 1 told us the proceed of sale on non-current investment amounted to 30,000. Okay, so we must have had a profit or loss on the disposal of this investment. Now, if you look at it, they told us we received 30,000 naira. However, if you come and look at investment under non-current assets, you will see that investment was worth 25,000. It had a carrying amount of 25,000. But if you look at 20x2, that investment is not there, Abi. That confirms to us that that's the investment they sold. Now they are telling us that they sold it for 30,000. We must have made a gain. So I'll say gain on sale of investment. All right. Gain or sale of investment. All right. Sales proceed. Now this sales proceed is cash. We are going to recognize it under investment. Sale proceed was 30. All right. Carrying amount of the investment was 25. Therefore, the gain on sale of investment would have been 30 minus 25. So therefore, gain on disposal. Now, what must have been done is that this gain would have been added to profit before tax. So what do? I minus it. All right. Okay. What's the next thing there? Gain, we still have another disposal, Abi. Let me put it here. Let me just write it as it should be. This should be gain on sale of investment. All right. Then we have gain on disposal. On disposal of non-current assets. I'll say PP. That's the specific non-current asset there. Okay. Now let's look at this one as well. Let's look at this as well. What gain have we made? We were told, if you look at note 3, we were told that, is it note 3 we should be looking at now? Note 2, we were told that we received, it was sold for 32,000. Abi? Now, don't forget that this has to do with disposal. What we did earlier. So do we have a gain or loss? The carrying amount of this asset, where am I lighting now? Where am I lighting now? Colored in yellow. This asset, the carrying amount is 45,000. But what we received for disposing it was 32,000 naira. Okay? It therefore means that we have made a loss on disposal. Why? Because what we received in cash is less than the carrying amount. So I will say loss on disposal of PP. All right? Sales proceeds amounting to how much? 32.
32,000.
All right? Carrying amount amounts to how much? 45.
45.
So our loss here is that not 13? That's 13. So I'll come here. This is a loss. It means you would have deducted it. If you look at the template, you will see loss is an addition. Profit or gain is a deduction. We would have deducted it from the PBT because it's a loss. All right. So we'll add it back now. Are we making progress? I think we are. All right. I think I have dealt with everything that has to do with adding back or any other adjustment. Is there any other thing left I'm yet to deal with? We've dealt with depreciation charge, finance costs, the investment income that we had, the gain or loss on disposal of non-current assets. We've dealt with all of that. All right, okay. Next thing is I'm going to look at my changes in working capital. Changes in working capital. All right. So let's look at, I have told you, when you want to do changes in working capital, your working capital would refer to your current assets and current liabilities. However, I warned you, anything that is cash and cash equivalent, you will not touch it because that is what you are reconciling to. All right.
Mm.
Of this statement you are doing. Are you getting my point now? Is it clear? Do you understand what I'm saying?
Yes,
Okay.
yes.
Now, I want somebody in this class to tell me. Okay, don't worry. Let me get there first. I have a question in mind for us. All right. So let's go to the current assets. Just flip there. Go to the current assets where you have inventories, trade receivables, and the likes. And you will see that there was a movement on inventories and it was an increase. I have told you, whenever you have an increase in your assets, you do the opposite. And what I mean by that is that increase should have been a plus, but you will treat it as a minus. All right. Increase in inventories. What do I do? 105, I be 150 minus 102. That should be like 48. This 48, I am going to deduct it. All right. Receivables. Do we have increase there too? Yeah, we do. It increased from 315 to 319. So I'll say increase in receivables, and that'll be 390 minus 315. All right. Sorry. So the difference between them is 75. So that should be minus 75. All right. So now, if you look at my current assets, I have short-term investments, I have cash in hand. These two items will form part of cash and cash equivalent.
Cash
Now,
equivalent.
cash in hand is cash, no problem. But short-term investment, a lot of students, they intentionally put it there because they know that a lot of students would have gone ahead and do a movement there. No, that is the movement you are supposed to be explaining to us. All of this thing you are doing is to explain that movement, not for you to do the movement as part of the workings. Because the IAS 7 is very clear. What they refer to as cash equivalent includes short-term investment. In fact, any investment that you're supposed to get returns and the maturity is between 3 months or 91 days should qualify as a cash equivalent. Do you understand? So that will not be part of what I'm going to do in terms of changes in working capital. So I leave both of them, short-term investment, I leave cash in hand as well. And then we'll go to current liabilities. And there I can see trade receivables. I mean trade payables rather. Now, did that increase or not? It also increased. I said when it is liabilities, current liabilities increases, you treat it as it is. Meaning if it's an increase, I will add. If it's a decrease, I will deduct. All right. This one is an increase. We move from 119 to 127. So what's the difference there? Is that not 6? So this 6 will be an addition. Now, if you look there, after that, you have what is called bank overdraft. I want to ask a question in this class. How would I treat that overdraft? What's the treatment for the overdraft?
Okay, that comes part of cash and cash equivalent.
Thank you very much. Thank you very much. It will be part of the cash and cash equivalent. So I'm not going to treat it as well in my solution. It is also part of the cash and cash equivalent I'm trying to explain. All right, so we'll move on. Taxation. I have told you that your taxation is expected to be shown in your operating activity. It's part of the disclosures. It said IAS 7 says, except in cases where you can really show it, you can tie it, that what is it called? That tax can be shown to be part of financing or investing activity. Now, where that is possible, we are going to do deferred tax under IAS 12, income taxes. Your deferred tax could be accruing from an item such as PP. It could also be accruing from maybe impairment on investments. It could be accruing from an investment security you have, whereby there is an expectation that you will be charged an amount, or there's just a difference between the tax base and the carrying amount. We'll get there, we'll discuss that. So in such an instance, you may want to show taxation separately under investing or financing activity. But for the purpose of this exam, don't worry yourself about that. Don't worry at all. Don't worry yourself. You will find it easy to treat. Now let's look at the fact that we've done all the changes in working capital. Now, what did my template say you should do after
Yes.
you have done all of this? You can say you
So
have.
this increase in trade payable is 8, not 6.
Oh, thank you very much, because that would have given us headache. 8. Thank you.
Okay.
Okay. So now my template says what we should do from here, because they can ask you that what is the cash generated from operations. Okay, so the cash generated from operations will be, sorry, cash generated from operations. All right, so cash generated from operations will now be the summation of all this. Am I correct? Oh, sorry, I did not add profit before tax. All right, now what are the payments that I have made that are operating? I must have made tax payments. Let's see. Let's see whether I'm correct by saying I must have. Let's go to taxation now. Now, we see a movement there. If you look at taxation under current liabilities, you see that there was an increase from 110 to 120. So what would have informed the increase? Okay, let's look at it. Tax paid is what I'm trying to get here. We'll start like this. Taxation that was brought forward in 20x1. At the end of 20x1, we had an amount 110. All right. Now, what should have increased this account you would suspect is the income tax expense, abi, for the year. Income tax expense for the year, all right? Now, how much was the income tax expense for the year? All I would do is go to my income statement, 140, all right? So it means that I should have had a balance of 250. But at the end of the day, I have a balance of how much? I have a balance of 120. I have a balance carried forward. At the end of 2022, we have 120. It's simple. The only reason it was reduced must have been that we made tax payment. So this is my tax paid. All right. So yeah, I'll say my tax paid must have been 130. Now, I can refuse to do my interest paid. Yeah, I can be adamant and say, no, my interest paid, I want to treat it as financing activity. As long as you will not forget. As long as you will not forget. Should I trust you not to forget? Yes, I want to believe it's possible for you not to forget that you have done that. So I think I'm done here. I can say cash generated or cash flows generated from operations. What did my template call it? Say net cash generated from operating activities. So I can say, sorry, net cash flows generated from operating activities. All right. So yeah, I have 203 there. And now I can go on and do my investing activities. All right. Okay. So I'll say investing. So what are the things I should look out for under investing activity? I've told you always look at your current assets. So what are the things I did with my current assets? Number one, don't forget that we had a sale proceed from we had a sale proceed from non-current asset investment. All right. If you go to information number one, they said proceed of the sale of non-current investment amounted to 30,000 naira. All right. So I'll say sales proceeds from sale of investment. All right. Investment is how much? 30,000. I mean, now we also sold PPE, the sale proceed on sale of PPE we must have received the 32,000. Even if it was a loss, we received 32,000. That's inflow. So both of them, I don't put jacket. But don't forget that we have not analyzed the cost. Mind you, it is from the cost that I am going to know whether we have gotten additions or not. Now, pay attention, pay serious attention to what I want to do here. I explained in the last class, I said at times your PPE will be broken down into the cost elements, the accrued depreciation, and then the carrying amount. The carrying amount is not my problem. What is my problem is this. There are three typical movements that are very, very common. It does not mean that there cannot be other movements, but there are three typical movements that are very, very common. Even if the examination is easy, I will have them. I am sure 99% of the time, you will likely have them, especially when they break it up like this. You would have additions, meaning that you purchased new non-current assets or PPE. You will have disposal, meaning that during the year, you must have made or sold out some of your PPE item. And the normal one, that year on year, you will calculate depreciation on the asset. So those are the three things that you are likely to see. Now, this question has given us more than that. I'm going to look at the other ones, but pay attention to what I want to do first of all. Now, cost of PPE is where I am going to see additions or purchase of new PPE. All right. So I'll say costs that was brought forward in 20x1 was an amount. How much? The cost was an amount. How much? Go to note 3. You will see the breakdown there. 595. 595. All right. Now, I said three things. Depreciation will not come here. But when you make disposal and you make additions, they will affect the cost. Depreciation will not affect the cost because the essence of breaking it down like this is so that we'll be able to know the historical cost. All right. Now, we have disposals. That one is easy. So when I'm treating disposal here, I'm dealing with cost. So it is the cost of the disposal that I'm going to make reference to. Okay. And how much is the cost of the item we sold? Is actually 85,000. All right. So is that 85,000 I'm going to give credence to? Not the account deep, not the carrying amount. Now, because it's a disposal, I'm going to be deducting it. All right. Now, remember that what we are looking for is the addition. Now, before I go on and jump into other things, can we quickly go to additional information number 4? Something is instructive there. They told us something there. They told us that on 31st December 20x2, Emma purchased a chalk quarry from which extraction will take place for 5 years. At the end of that time, Emma will be obliged to close off the quarry and make the area safe. The cost of this has been estimated and discounted to a present value of 40,000. Which is included in the carrying amount of the quarry and shown as a provision. Now, all right, sorry guys, that was the network making its regular appearance. We have seen it. All right. Let's move on. Apologies for that break in transmission. If anybody left, let me just put a word on the group that we're back on. So now where I'm going is this. Let's go back to the question. I was trying to point out something to us there. Um, where was I? I think additional information number 4. And what we're saying is that, you see, I was asking a question. Have we done IAS 16? Because what I want to discuss next is coming from IAS 16. Property, plant, and equipment, PPE. Why is nobody talking now? Mr.
Yes,
Joseph.
sir. Yes, sir. We've done it. We've treated
All
IS
right.
16.
All right. Remain unmuted. I want to ask a question. What do you think of note number 4? It's one of the clauses you have in IS 16 they are referring to here. Mhm. This chalk quarry is an item of PPE. All right. It's a property, it's an item of PPE. Can you explain what you think they are? You don't have to explain in terms of, just give me an idea what you think they are referring to here.
Note number 4.
Yes.
What I can say as note number 4 here is ordinary share were issued during the year. I don't know
Let me
whether
see.
mine.
Exactly. Exactly.
Oh, I am being too nice. Out of my over niceness, I removed that additional information. And the reason was that I wanted it to be squarely cash flow. What do you mean? I should have just left it. All right, no wala. I removed it when I was dealing with when I was moving it to this question. I removed it. I've seen earlier, Mr. Wasu actually was the one who started it. He removed it. I My intention was to add it back. So I didn't remember when I was doing this yesterday, I was supposed to add it. All right, it's fine, no wala. You escaped it. All right, no wala, we'll move on. We move on. So, away from that, away from that, um, any other thing there that we should look at? I think there is still something there. Let me be sure this one is there. We should have revaluation surplus. Yes, we do. We do have a revaluation surplus, and I wanted to talk about this as well. Now, this revaluation surplus, the question did not specifically mention where it is coming from. It did not specifically mention where this revaluation. Every time you have a revaluation surplus, it's coming from somewhere. It's usually coming from an asset. It means that you revalued an asset, and when you looked at the current value of the fair value of that asset that you came down to, you saw that it was an amount that is higher than the carrying amount. So therefore, you will recognize a revaluation surplus. All right. Now, some people would have recognized this revaluation surplus straight into their OCI, blah, blah, blah. I'm sure you must have dealt with this under revaluation method with Mr. Wasu. Either it is under IAS 16 or you are talking about evaluation method under IAS 40, investment property. Now, I am going to assume that this revaluation surplus, I am seeing a movement there. If you come under equities, you will see it there. It moves from 91 to 100. Now I'm going to assume this revaluation is on property, plant, and equipment. You know why? It's easier for me to have it that way rather than think of investment property that is not even in the question. All right. So I'm going to take it as that revaluation surplus is coming from PPE. And now that would have increased the cost or the carrying amount rather of our item of PPE. So I will deal with it under the cost because I can't deal with it under accrued depreciation. Either I treat it under cost like this, or I'm looking at it from the angle of carrying amount. Now, if I'm looking at it for the carrying amount position, there will be a lot of things I'll be dealing with that you may not understand. So I rather break it up like this. Okay. Now that I've broken it up like this, I will deal with that revaluation here. Revaluation increased, revaluation surplus. Okay, I know what to do as regard that one. That other note is not your set, it's the other set, it's the next set that will suffer it. Now, if it's increased from 91 to 100, then it means that in the current year, we would have increased our OCI by 9, and then we would have increased the cost or carrying amount of this PPE by this difference, which is how much? 9. Now the difference here, the difference is this. At the end of the day, this is what should be my balance. But what do I have as my balance? My balance at the end of the day is, do I have somebody asking question? Okay. That was when I logged out. I was thrown off. At the end of the day was 720. So therefore, the addition, or if you like, purchase of new PPE must have been the difference here, which is 201. So I'll say additions slash purchase of PPE. It will be an outflow. So this all right. Now, what's the next thing we have there? Let me look at the question again. So that means I have to be looking at this question. Under non-current assets, we have intangible assets as well. We have dealt with investments. We have dealt with PPE. All right. Let's deal with intangible assets. Now, they did not break up the intangible assets, and they did not tell us anything about amortization. So I'm going to assume very simply that the movement I am seeing on intangible assets is because we increased. There was a new development during the year. So I'm going to say new intangible assets. I am referring to additions now. Okay. And that would have cost us money because that would be one of the reasons why we have the assets in the first instance. Okay. I'll say balance brought forward was 200. So if balance carried forward is 250, then the additions we have here should be the difference. So we'll assume that this was a cash flow too. I can say additions to what? Intangible assets. How much do we have there? How much? 50. So I'll say minus 50. All right. Now, have I really dealt with everything? Don't forget that I have investment income I accrued here. All right. Now, what I did the other time was to deduct the investment received. Yeah. Other income, they said investment received was how much? 25. So since they said received, they didn't just say it was accrued. They said we received it. So I will take it as a cash flow. So investment income received was how much? 25. Now let me see if I can reconcile that from my SOFP. I just want to look at it. What's the next thing? Is there another thing we've not treated there? Is there another thing? I don't think so. All right, let's move on then. What is the total here? Sorry, it will be moved here. So I'll call this net cash flows used in investing activities. All right. Next thing I would face now will be cash flows from where? Cash flows from financing activities. So we're almost done. I'm sorry if I've taken time. I'm trying to ensure that we all get it. So we don't just move on. Now, cash flows from financing activities. I said you should look at equity. Now I'm going to treat my equities together. Number 7. Now, if you look at additional information 4, you will see there that we have issuance of ordinary shares during the year at a premium of 20 kobo. All right. So we did issuance of shares. All right. Sorry, 50,000 ordinary shares were sold for 1 naira 20. Sorry, 50,000 multiplied by 120. So we would have received cash from issuance of shares. How much? 60,000. Now, where is, I'm coming, please. I want to show you something. This is a receipt. All right. This is a receipt. All right. But then when I'm looking at my ordinary share capital, okay, balance carried forward, I'm looking at share capital. How much was the share capital at the end of 20x1? Was 150. So this issuance here, if we do at 1 naira, ordinary share capital is at 1 naira, that would have given us 50,000. So I moved from 150 to 200. That explains it. It's simple and clear. I can see that movement. All right. For share premium as well, if you look at share premium, it moved from 150 to 160. That would be referring to the 20 kobo they are referring to. 20 kobo times 50,000. That would have also given me 10,000. That explains that movement as well. All right. From 150 to 160. All right. Revaluation surplus. We have seen this movement already. In fact, we have used it in analyzing additions, yeah? Additions of new PPE. Remember this line? So nothing is the problem there. We know what we have there. That's not an issue. So evaluation surplus of 91. All right. Now this is where I'm going. Retained earnings. Retained earnings in the previous year was 180. 180. Don't mind me. So altogether, everything that we brought in was 571. However, in the current year, we have seen that there was an issuance of shares, and we expect that that would have increased it by 60. We have also seen that there's a profit for the year. Yes, that would have increased our retained earnings. Now, the profit for the year was how much? According to our statement, yeah, it was 160. All right. So going by this, if you include this total as well, it means that my equities altogether should be 791. But my total equities in the current year, if I add ordinary share capital of 200 plus 160, that makes 360, plus 100. I'm sorry, I don't want to overspend our time. So let me just move a bit faster. If I add 100 to that, I have 460. If I add 260 to 460, I think I end up with 720. Sorry. I did not put the revaluation gain for the year. Revaluation gain for the year. Because that's not part of your profit for the year. Remember, it's under OCI. That would have gone under OCI. So let me just let this one include the 9. Okay. So what we have here is this. We should have 800. But our final balance is how much? 720. So what difference do we have? Where is it coming from? Don't forget that I told you in the last class. Look at retained earnings. Retained earnings was 180 in the previous year. Profit for the year was 160. All right? It means that the balance we should have should be a sum, which is 340. This 340 here. But when you look at the retained earnings in the current year, what you have is 260 instead. Because we have seen all the movements. But there's one more movement that we are yet to see. And that one more movement you are yet to see is the dividend that was paid. Dividend must have been paid. That's the only reason you could have had a reduction from 800 to 720. So dividend must have been paid. 800 minus 720. And that gives us this. So yeah, in my analysis of the equities, I found out that what I should have is dividend paid. Sorry, this should be treated like this. Balance minus what we should have had. So I'll come here and I'll say dividend paid. How much now? Dividend paid. $80. All right. Okay, it already had minus. I just say equals all right. So net cash flows used in financing activities. Oh, sorry. We did not consider liabilities at all. At all, at all. Let me see. Do we have a long-term liability in the question? Yes, we have long-term loans. We have long-term loans. Okay. That reminded me that I left out interest paid in the beginning. Okay. Long-term loans are usually associated with interest paid. So let me see. Do we have interest paid? Do we have additions? Okay, I'm coming. Let me just do it like this. Long-term loans. Let's see what comes out of it. All right. Now, balance brought forward was how much? Balance brought forward was from the question here, long-term loans 50. All right. Now, the interest expense was how much? The interest expense, finance cost was 75. Finance cost was 75. Therefore, now, did the question mention to us that we actually paid any? Oh, the question had even mentioned to, wait, let me see. Sorry. Just want to check. Oh, the question actually said we paid dividend of 80,000 naira. I omitted that. All right, let me see. Did the question specifically mention that we paid interest? I don't see it. I don't see it. Okay. No wala. So let's see what we'll come down to. So this should be our balance on long-term loans. But what do we have as our balance for long-term loans. Let's quickly round up before this thing will start throwing me off again. Now, this is what we are going to do. I have two options. I can see where we are going with this already. Mr. Latif, you were saying something before I went off. Sorry.
I said we are together. It's only that somebody is a late comer.
I'm sorry. I know you had peace half class, right?
No. Just
I
came
want
back
to
late.
I want to confirm. I have not gone online to check. Do we have the last class uploaded already?
Huh?
Has anybody checked?
I don't know.
All right. Okay. No wahala. I will check after the class. All right. Now, I can see the movement here is an additional 5. Now, this is how I look at this. The question did not tell me that we made interest payment. So, you cannot penalize me for saying that what we have is new loans. All right? A new long-term loan. I can do this. Or I can do something else here. Look at what I can do again. I can say that because I expect that this 75 is a mandatory payment. You accrued it because interest, you are supposed to pay that interest annually, right? Okay, I can decide to say, I am assuming that you have paid the 75. That you have paid the 75. If you pay that 75, what I will have now as the expected movement will take me back. I'm coming up. I will now have 175. What have I just done? Okay, hold on. I can have this, and then I'll compare that to 130, and then I have 80 addition. What am I saying here is, I can assume that we have paid interest. Interest paid, 75. Then we now took new loans as 80. The net effect of this is still this 5. All right? Now, but what I would rather do, I don't want to force myself or force you to assume that interest has been paid. Take the net amount, take it to your net cash flow. It came as a plus. If it's coming as a plus, it means that my loans must have increased because I took a new loan. And if I took a new loan, it means more cash to me, right? So I will take it as a new loan and I can bring it here. The net effect is the same. Either I take 75 as interest paid, and now take 80 as new loans. The net effect is -5. If I like, I'm coming. So yeah, I can say new loan. How much? This is an inflow. Money came in, 5. Even though it's loan, we will not say minus. We will say addition because it's an inflow. So net cash flows used in financing activities is now -15. So altogether, If I add everything together, I have plus 24. So I can say net cash flows for the period, right? The template calls it what? I have to be careful here. What does the template call it? It says net cash flow, net cash increase or decrease in cash and cash equivalent. All right. Net increase in cash and cash equivalents. All right. Now, what is going to be our cash and cash equivalents at the beginning of the period, which I can call
Plus 20, plus 9.
I can call it cash and cash equivalent brought forward. Abi?
Yeah,
At
yeah.
the beginning.
Plus 9.
Why is this one splitting it? Yeah, let me write it. From the beginning again. From the beginning again. All right. Okay. I should shift this. And yeah, I should have at the end. Now, we don't have it on one line. All right. So what we have at the beginning will be the cash we have at the beginning was how much? Cash we have at the beginning was how much? Cash was 1. 1 plus. There was no short-term investment. All right. Sorry. But there was an overdraft. So this would be minus 98. We have a 1 minus 98. That will be minus 97 then. So at the end, what we should have at the end should be, what is our addition? 2 plus 50 minus 85. Now 2 plus 50 minus 85 is equals to what? Let's see.
Minus 33.
Minus 33. But what do I have here? Instead, I have 73. Happy? This is 52.85. Okay. What I should have is 33. Minus 33. What's the difference? 40. Okay. Do we have 140 here that we did not treat? All right, let me go back. Short-term investments. Let me see. Okay, short-term investment is what we were analyzing. So I don't have a problem there. Non-current assets. Is there anything I left behind there? Okay, in comparing my long-term loans, I'm seeing something. Nobody told me this one. I said 130 instead of 170. That's where the 40 is coming from. And I did not tie it to. I did not
Is
tie it
that
to
the,
the solution.
is that the
That's where the
logic you
problem. What did you say?
is that the logic you said yesterday that you will teach us in case if our account will not balance?
Yes, I'll go back to it. Don't worry. Your account will balance.
I will even force.
It's new loan, so it's an addition. We don't have a problem with that. So this is 45, not 5. You see, there's no difference again. Now, this is what I'm saying. Let me see if I can show you tonight what I was referring to yesterday. All right. I wish I had the question beside me here. What you knew? Because the question, huh? I can't remember which file, which of the files. Let me see. Maybe I have it opened. Yes, I do. Good. This is where I moved the question from. Good. I have it. Can you see my screen, everybody? It's
Yes, sir.
another file. You won't see it because I'm sharing window. Let me stop sharing and share the whole of my screen. We are even done already. Just let me do what I have to do. So that, can you see my screen now?
Yes, sir. Yes, sir.
Yes. So let me go back to where I typed the question. I'll be glad if I can have it all on one page. Now, this is what I used to do. I will say for assets, I'll turn it around. It will be the previous year minus the current year. All right. And then I will drag it down. All right, good. Let me color these ones. This is the cash and cash equivalent, Abby. Now for these ones, I'll do current year minus
For the current
previous
asset
year.
and non-current asset.
What did you say?
For both current asset and non-current asset.
Yeah, all of it. I'll do it that way. Don't worry. Now let me see the addition of all of this.
Wow. Wow.
Okay, this alone is 274. Then if I add this, it gives me 126. All right. Did you see it? What I did? And everybody see what I did?
No. Can you please explain, sir?
Okay. Let me put it in green. Now, everything I put in green here, if I add everything together, if I say sum this and these other ones in green, it sums up to how much? 126. Look at my cash and
Only the green items.
I'm coming now. Only the green items. Oh, receivables should be there. Sorry.
Uh-huh.
Receivables should also be part of my green.
Except short term is investment and cash.
Yes. So loan is here. Sorry. I want to leave out loan too. Let loan be yellow. This is my cash and cash equivalent. I'm coming. Let me redo my formula. So my formula should only consider these ones in green. What am I doing now?
Cash flow.
This and then this. I will meet that 120. What did I get? I get 69. Now you can see what. Let me let you have a good view. You can see what is carrying is just those ones I put in green. And the things that I put in green are all the movement of my financial position. Except my cash and cash equivalent, right? 69. Now, if I do my cash and cash equivalents, the ones in yellow,
51.
Of the overdraft.
yeah, it's also in yellow.
Is in green.
I'll pick it.
Okay.
Kilo
Where's
shaving. Oh God. Wow. This one, I thought I was speaking overdraft when I picked it. Sorry. So this one should be in yellow.
I wanted to confirm why the loan liability is in here.
Why what?
The
that was the
why?
mistake. The
So
overdraft.
that's the mistake. Yeah. So this should include this, but let me come out and say minus. It should not include. It should not include this one. So everything gave me 64. All right. This one. I'm still going to do it together. Don't worry. 64 as well. So what am I trying to teach you here is this, that if I look at all the movement, did you see the sum? The sum is 0, Abby. Can we all see it? Look at where my cursor is. The sum of all the movement equals 0, Abby. Now, what am I trying to show you is that it is the movement line by line that explains this. When I did the movement of the cash and cash equivalent, it gave me minus 64. When I do the movement of all other line item, line by line, it also gave me 64. Now, look at it. If my cash flow did not balance, I will now probe it like this. I will say one after the other. I want to check each line. Where did I not explain everything that I need to explain? Look at PPE, for instance. You see, PPE is minus 75, Abi? Now, let me go to my cash flow. What are the things that should explain? What are the things that should explain the movement of my PPE? Number one there is what? 90, depreciation charge, isn't it? Number two item there is loss on disposal of PPE. It also has to do with PPE, isn't it? Let me color it. What's the number three thing I'll see there? I'm also seeing sale proceed from sale of PPE. We sold PPE.
32.
32.
And you bought PPE.
Additions. We bought new ones. 201. So if I add this, and this, I get 66. All right. Now, don't forget that the reason we have, one of the reasons we have 201 here is this 9 I'm seeing here, this revaluation surplus. What's my movement again? My movement is 75. I'm coming. On the face of my cash flow, I can see 66. Abi, is there any other thing here I don't want to pick from my workings? Depreciation. We've looked at depreciation. We've looked at addition. Abi, we've looked at the proceed we received for the
Yes, sir.
sale. So the only thing here that we have not touched is what? Is the revaluation.
That's a non-cash.
Is a revaluation, which is a non-cash, but also affected our movements. Abi,
Yes, sir. Yes,
that's
sir.
the 9 I'm looking for. The revaluation gain during the year. That should bring it to 75. But because it's part of my workings, it's already affecting this 201.
Okay. Okay, sir.
The reason I'm not seeing it here on the face of my cash flow is because revaluation, don't forget, is under OCI. It should have been
Yes.
treated under what? OCI. Now, if it was part of what I was adjusting for here, I would have said -9 because it would have been an addition. Abi? Now, if that one is not clear enough, come here, come and look at investment, -50. I mean, intangible assets. This one was straightforward. We didn't do much there. We just brought it here, -50. Intangible assets. We bought new intangible assets, -50. You can see that one is straightforward. I will come here again and I'll say, what happened to investment? I can see 25. Okay. What are the things associated to investment here? I said investment income. I took it away. Abi, let me put it in another color like this. All right. But I brought it here. I first of all added it back. And then I said, oh, they said we received it, Abi. 25. I brought it here. That's that 25. But then we received money for sale of investments. How much did we receive? I'm coming. Oh. These are things that are pertaining to investment. Investment income. Look at it. Everything came down to what? 25. Because it's an asset. My movement will be showing me that 25. Abi?
Yes.
Are you getting what I'm trying to say? Look at everything that pertains to investment. We did investment income. We removed it to adjust for it. We had sale on the gain on sale of investment. Abi, -5. I added it. Sale proceed 30 is there. Investment income received. So all of the things I did to analyze that movement must still total this. If you come to inventory, this one is straightforward. You did increase in inventory -75. Receivables, you did -75. Abi? Good.
That's an outflow.
Now, we are not analyzing this one. When you come to share capital, and share premium. Both of them were affected when we issued. We issued at a premium of 20 kobo. So we did 1.20 times 50,000 shares that we issued, and we got 60,000. That 60,000 is what you are seeing here. All right. So that's the 60,000 you have here under financing. 60,000 is there. Okay. Can you see what I'm saying? Now,
Yeah.
the revaluation surplus, the movement of this revaluation surplus, let me repeat again. The reason it's not showing is because it's part of the OCI. All right. And now we don't treat OCI here. That's why you are not seeing it here. But we have dealt with it here in our workings. All right. We showed this movement, evaluation gain for the year. All right. So it affected the movement on this our equity side. I'm coming. Retained earnings movement should be 80. So what movement do we have for retained earnings? We pay dividend, all right, minus 80. Minus 80. Now, it increased by how much? It actually increased by 80.
50.
All right. But this dividend is a minus, right? Okay, so what are the things that could have accrued for this one? Don't forget that we have a profit. Yeah.
For the current year.
For the current year, Abi.
Yes,
Good.
sir.
That profit was how much?
I will see it in the question.
That profit was how much? I have the question here. 160. All right. The profit for the year is 160. Abi? And
Yes,
then
sir.
you paid dividend. Is that dividend you are seeing here? You paid dividend of 80 and you have accounted for that dividend.
Okay.
So here, when you were
160.
doing this adjustment here under profit operating activity, I will assume that profit has been taken care of. The only thing is that we started from profit before tax. We didn't start with profit after tax. All right. Now, if you come down again, what other movement do we see? Long-term loans, 120. So what accounted for the long-term loans? Remember we said there's a charge of 75. Let me use another color again. 75, Abi. And then we said we took new loans of how much? 45. If I add 45 and 75, it makes up that 120. Abi?
Yes, sir.
That's the 120 you see there. Trade payables. We said it down is straightforward. This is the 8 there, increase in trade payables. Bank overdraft is part of what we are working on. Now, tax, 10. This is part of the ones that used to have many, because those are the things that, the one that will cause you to have problem can never be all this working capital. What can cause you to have issue is things like PPE, things like loans, things like tax. Why did I say so? When you are dealing with tax, you will deal with income tax charge for the year. You will now deal with income tax paid as well. When you are dealing with PPE, you would have dealt with additions. This question has evaluation. Most questions will not have. But be prepared, they can give you evaluation too. So if it is missing by the revaluation increase, you are on the right track. If what you are seeing on the face of your cash flow compared to the movement you have done is the difference is the revaluation, you have done the right thing. Don't worry. For loans, it will have interest expense, and then there will be, if they told you there was payment, you will deal with the payment, and then you may now have new loans that are taken up or principal repayments. So those ones only be more, you can have components that are more than one, unlike your current asset. So you watch out for those ones. So this one now, you can see it is the addition of the interest expense that we added back and the new loans 45. That's what makes up that 120. But I was going to talk about income tax, Abi. So let's go back to it. The income tax we have here, tax paid is 130. What is the difference we have there on that line? The difference we have is 10. Only 10. All right. Sorry. Only 10. Now, this is profit before taxation. Abi? Profit before taxation. Meaning that inside that profit, the taxation of 120 is still inside this 300. We have not removed it. Abi? I don't know if you get what I'm saying. Hello? Can you hear me?
Yes, sir, we can
Yes.
hear you.
Inside this 300, 120 is there. And you have done minus 130. Your balance here is 120. The tax, only one line is representing tax, and it is minus 130. That explains this thing. If you think what I'm saying is not true, you can look at it like this. How much is the profit after tax in this question? The profit after tax was 160. I could have done everything I did here. The only thing I will change is, instead of profit before tax, I will say profit after tax, 160. All I would have needed to add to cash generated from operations, I would only have needed to add the income tax for the year. Now, what is the income tax for the year in the question? Income tax is 140. Add 140, yeah? How much is the tax paid? 130. How much do you come down to? That's income tax expense, 140. All right? There should be an addition here. Okay. Sorry. This one had 300 already inside it. I don't want it to have 300. Let me take out my 300. We'll come back to the same 203. Now, this would have shown it very clearly. Why? Because this would have broken it down into the income tax expense is 140. All right? Is already inside this 300. We did not deduct it. And then we have income tax paid, 130. This is what is explaining this 10 difference. this 10. So at the end of the day, what I'm trying to say is that at the end of the day, I should be able to see all of my movements represented on my cash flow. This is what I do in practice. If I ever have to do any cash flow, if you ever bring any cash flow to me and you say, Abiodun, this cash flow did not balance, which usually happen, at least to amuse me, is that there is no reconciliation you are doing in accounting that fell down from heaven. That reconciliation is a movement of what you have already done in another statement. Because cash flow to me is like a reconciliation. What are we reconciling? We are trying to reconcile this movement here. These ones I put in yellow here. These are our cash and cash equivalents. That's what we are trying to explain. All right. So therefore, if I must explain it, what are the things that will explain it? Are those other line by line movements? Those are the things that will explain it. Those are the things that will explain it. So even looking at it here, everything here, all the difference is 64. All the difference from my cash and cash equivalent as well, all that movement is also 64. So I just look at it line by line. You may not be an expert at it in one day, but as you continue to solve, if you ever have an issue, just go back to that movement and say, what is the line by line movement that I have not accounted for properly? That's what will answer your question. All right, it's already a time fast spent. Now I gave us question. Edakun, please and please, I'll put it online as well on the WhatsApp group. Go and solve that question. I said tomorrow around 1 a.m. when I sent the question. I said tomorrow 6:30. I was not referring to today, I was referring to Sunday. All right. So I'm expecting you to solve and send in your solution. All right. Thank you very much. In the next class, I'm looking for a question where I can do direct. I've not seen most of the ACCA materials that I use, because for their own exam, they don't even ask direct at all. But I know ICAN can want to show themselves and give you a question that they want you to do direct. I'll look for one in the past question. We may solve that additional one. I won't go far. It will just be operating activities I will look at. Then the additional question I give you, you go and solve and then you get back to me. If you have any issues, we can iron it out at the one-on-one level, and that will be that about that. All right. Thank you very much for your time. God bless you. See you in the next class, where we are going to move on to either we look at IAS 12, which is another standard that I said we are not going to do with CR students. The other three, I already marked it that we will do it with the CR students. So see you on Tuesday by the special grace of God by 8 p.m. on Tuesday. We should meet. All right. Thank you very much for your time. God bless you.